Hello and welcome to interest.co.nz. I'm Gareth Vaughan and welcome to our Of Interest podcast. I'm joined by Ian Woolford, who is the Reserve Bank of New Zealand Director of Money and Cash. Ian is going to talk to us about the Reserve Bank's work on the potential development of a central bank digital currency. Ian, welcome to the Of Interest podcast. Appreciate your time today. Now, the Reserve Bank is exploring the potential introduction of a central bank digital currency, or a CBDC. So just what is a central bank digital currency?
Yeah, so a central bank digital currency is basically a digital form of currency. Like we have physical forms of currency, we have banknotes and coins. Banknotes and coins are a legal claim on the central bank. It's a fiat currency in that it's backed essentially by trust in the government and its institutions, and a CBDC would just simply be a digital form of a fiat currency. And collectively, we refer to both physical currency and digital CBDCs as central bank money, to try and just bring the two together into a more general concept.
Obviously, there's a lot of electronic money already in use. I mean, if I go downstairs and buy a coffee, I'll probably use an EFTPOS card or Apple Pay or something like that. So how does this form of digital currency differ from that?
Well, as I mentioned, it's a form of central bank money. It's backed by the government. You're right. Most transactions in the economy are done using digital forms of what we would call private money. So there's all sorts of private money. Most people use private money in the form of their bank accounts with registered banks in New Zealand. And I guess the main point of difference is that you are effectively taking a credit risk with your bank. So your claim is on the bank. Whereas with a central bank digital currency, your claim would effectively be on the government, which typically has and is the case in New Zealand, has a higher credit rating than private institutions. So you're effectively abstracting away from the credit risk. That's one main point of difference.
So you have done quite a bit of work on the central bank digital currency concept already. Have you actually made a decision yet whether the Reserve Bank is going to go ahead and actually introduce one?
No, we haven't made the formal decision. I would say that we are going through a bit of an evolution though. So we first started working and putting out papers and bulletin articles and the like on central bank digital currencies about 5 years ago. But it was really in the last couple of years we've got much more serious in the work that we've done on CBDCs. We haven't made a formal decision, but the more that we work on it, we've been out consulting. We're kind of evolving, I guess, what we're saying publicly. And what we're saying publicly now is it is our prior that a central bank digital currency will make sense. We haven't pulled the trigger, made the formal decision, but we are spending more and more time on it. We've announced that we will be moving to do a proof of concept, working with technology firms. So we're doing quite a lot of background work at the moment just to develop what that would look like, do the business cases, all the sort of background stuff you need to do. So we're moving along the spectrum, I guess, would be the way to think about it, towards making a hard decision.
Have you got a time frame on when you think you will make a final decision?
No, not particularly. We're thinking that it'll be over the next year or so. We'll do the proof of concept. We'll learn lessons from that. We may need to do another one. We'll be spinning out, I would imagine, multiple consultation papers. So at the moment, we've consulted publicly on the concept of a CBDC, just to say, look, this is what it is. Here are some of the pros and cons. What do you think? But the sort of work that we're engaging in now, so proof of concepts are to a large degree about technology, development, understanding, etc. But through that, it also helps you shape up questions in your mind around design features. use cases, how the user experience, all of those kind of things. And as we move into the more detailed work, we will inevitably be out consulting again on, well, we've thought more about it, and it will start to sort of shape it up through time. And there'll be multiple consultations. Now, how long that takes, these are not straightforward products, and they're fairly new, and there's a lot of devil in the detail. Not just in terms of the conceptual side of things about what you want it to look like, but in making the thing work, making it bulletproof, thinking about interoperability. So there's a lot of work to be done. So, it's years, not months. How many years is an open question.
Are there any particular public policy problems or issues that you believe a central bank digital currency would address or resolve?
Yeah, there's quite a few, and I sort of from time to time hear people say, "Well, I don't really see the use case. I don't see the problem." We've tried to lay that out in our consultation paper, and we talk about central bank money and we talk about monetary sovereignty. Now, when a country has monetary sovereignty, it can run its own monetary policy. It can set interest rates. It can, people have confidence and understand the unit of account. So we sort of collectively refer to these things as like a value anchor. So there's a few different sort of concepts in there, but there are a few things that really are driving us in terms of why this matters and why there's a public policy issue. So it's really important that New Zealand, first and foremost, maintains monetary sovereignty, and that sovereignty can be undermined or threatened through a number of channels. One channel could be, for example, the advent of cryptocurrencies or stable coins. People, if they choose not to transact in the New Zealand dollar, whether it's a private form of digital currency like a stable coin, or whether it is using another country's central bank digital currency. So effectively you'd be kind of dollarized. So one of the issues there is making central bank money accessible. So it's a fair and equal way to pay and save, and not necessarily to pay and save with a bank account. There are financial inclusion concerns that we might have. There are quite a number of New Zealanders don't have bank accounts, so there's that kind of angle as well. But one of the things that drives us in particular is to think about how a central bank digital currency could promote innovation and efficiency in the New Zealand financial system. So this is around how expensive and efficient or otherwise the New Zealand payment system is currently. We think a central bank digital currency could be quite catalytic in helping competition and innovation flourish.
I'm just wondering, you're talking there a little about, I guess, cryptocurrencies or crypto assets and stable coins, that type of thing. Obviously, at the moment, the Reserve Bank is legally the sole issuer of New Zealand currency within New Zealand. Is this to some degree a bit of a defensive move to retain that role, in a world that is changing quite a bit?
Yeah, I don't want to come across as overly defensive, but I think it's hard to argue otherwise if you're interested in protecting monetary sovereignty, and that threat could come from private forms of digital currency. Now, the other factor amongst all of this is when you think about how a value anchor works. Even though most people transact in digital forms of private money, i.e. their bank accounts, and they don't tend to think of it in those concepts, but that's what they're doing. Those bank accounts are ultimately underpinned by people's confidence in the New Zealand dollar. And so, around the world, what you see when a bank gets into trouble is queues at the door and people trying to take their money out. They want the cash. Now, as the cash system comes under more and more pressure and cash is used less and less often, that's another sort of environmental factor about that we need to think about, and we're doing quite a lot of work on the cash system redesign and trying to find efficiencies and thinking about all the incentives in the cash system. But that is another factor around, in addition to stablecoins and the like, why monetary sovereignty can be at risk and why we care about it. So yes, I think it's fair to say that this is to a degree a defensive play. And I think that's true globally as well. The concept of CBDCs has actually been around for about 25 years. The BIS wrote a paper in the early 2000s. And so people in the central banking community have been aware of this concept for a long time, but it's really not until the advent of global players like the Facebook-backed Libra and then Diem, and other big tech firms, that central banks have decided now's the time we need to act, and they're all acting in a defensive way, I think it's fair to say.
You talked a bit about monetary sovereignty. Why does that really matter?
Well, it matters in that it enables us to operate monetary policy, to set interest rates that reflect, the state of the New Zealand economy. Otherwise, if you don't have monetary sovereignty, you end up usually, and you've seen this in a number of countries around the world, being dollarized. So the citizens lose confidence in their own currency and basically use the dollarized, typically refers to the US dollar. So they lose control of domestic monetary policy, for example.
So you've mentioned monetary policy. So would a central bank digital currency help the Reserve Bank to meet its monetary policy and even financial stability mandates?
Yes, it could do. I think it's fair to say that things like, whether a central bank digital currency would be directly used for monetary policy, I'd put them more in the kind of ancillary benefit bucket. I think our starting point is to worry about central bank money per se, and to make sure that continues to be robust and trusted and able to be used by New Zealand citizens, as distinct from using CBDCs in some new way. For there are various ways that you could think about using them, but I think they're kind of ancillary benefits, and there are a few ancillary benefits that you could sort of bundle in as well. For example, we are, as a country, or as an institution, working on deposit guarantee schemes. If you had a central bank digital currency, you could think of that as a payout mechanism that would be fast, instantaneous, actually. If you think about the latest crisis, government's attempts to get money to individuals, often through the banking sector, which is a bit diffuse, and so you could think about the efficacy of having more direct channels to provide money to targeted groups or all citizens. So that's what I mean by ancillary benefits. It's not what's driving us, but it would be an option for governments to think about.
It's very interesting, and as you said earlier, with a CBC being effectively a claim on the central bank, I wonder what this means for the banking system, the banks that we use today, and us as consumers. I noticed that, among others, credit rating agency Fitch has suggested that there could be the potential disintermediation or loss of business and relevance for banks from the introduction of a CBDC. I mean, could I, as a consumer, have an account directly with the Reserve Bank through a CBDC? Would I even need banks anymore? And does the Reserve Bank want to disintermediate banks?
Well, there are a few sort of aspects to that question, I suppose. So one of the easier ones first. Would you have an account with the Reserve Bank? When you're thinking about a CBDC, there are two broad brush ways of designing it. One is an account-based approach, and so technically, yes, you could have an account with the central bank. There are actually already digital forms of central bank money that the large retail registered banks use for settlement purposes with the central bank. You could, conceptually extend those accounts to all New Zealanders, so everyone would have access to digital forms of central bank money. Or you can go down what's called a token-based approach and use distributed ledger technology and the like. So that's the more mundane part of the answer, I guess. The more exciting part of the question is, the disintermediation. And so conceptually, yes, and some people have, a number of commentators have said, this could have an impact on the banking system. And I think it's really important to sort of distinguish between an impact on the banking system and a destabilizing impact on the banking system. And whether or not, obviously the Reserve Bank is worried about financial stability. We do not want an unstable financial system. The banks are the dominant players. I don't think that tells you much about whether or not you should do a CBDC, though. And some people have said because this is a risk, you shouldn't do it. I think that's just far too limiting in its thinking. So there's a transition path. How you implement these things can have an impact. Currently, private money dominates. I would imagine private money would continue to dominate, even with a CBDC. One thing that we have said in our papers, though, is not our role to protect the interests of incumbents. And so, earlier I said we are interested in competition and innovation, and I think it's fair to say we are of the view there has been a lack of competition and innovation in the New Zealand financial system, which is dominated by banks. There is open banking is being talked about. An API centre has been set up, but very little progress. And if you go and talk to tech firms who are coming up with smart, cheap ways of paying and transacting, deep frustrations in that sector with access into the banking system. So that's what is really driving us when we talk about innovation and efficiency. So it's not just innovation in terms of new products, but efficiency in terms of how much does it actually cost to do these transactions. We have a very profitable banking system. Those profits come from somewhere. A lot of those profits come from transactions and payments offerings. We'd like to see more competition. Now, I find it hard to see a world, and certainly the Reserve Bank would not want to have a world where there were no financial institutions anymore. And everything was run through the central bank, and that is not what we are aiming to do. So I think a lot of the talk about the financial instability aspects of central bank digital currency is frankly overblown.
What about cash? I mean, would cash be phased out? Would there still be a use or a need for it?
We have no desire whatsoever to phase out cash, and this is not a cash replacement. We sort of say that repeatedly. When we did our central bank digital currency consultation, we had a phenomenal response by Reserve Bank standards for a consultation, and most of those responses were actually people saying, don't use this to get rid of cash. And we keep saying that is not what we want to do. We want people to have the choice to use cash or to use a central bank digital currency or to use private forms of money. So this is not a kind of a replacement play by the Reserve Bank, and we're doing a lot of work to try and make sure the cash system continues to be available for people to use.
One of the other issues that's raised is privacy. And you'll obviously be very familiar with this. Obviously, with central bank digital currency transactions potentially containing precise data about users and their financial activity, there are some concerns about, I guess, that information being there and how it could be used and who could use it. Obviously, also with other central banks around the world either having a few having launched central bank digital currencies or developing them, there's been a lot of focus on what the People's Bank of China has been doing, and I guess concerns at a geopolitical level even raised over potentially in the US. I note some Republican senators are trying to actually pass a bill or an act there because they've raised concerns about the Chinese government being able to know what Americans are up to through access to their payments. So in terms of, I mean, that's obviously a extreme example of the privacy concerns, but how do you address these privacy concerns?
Yeah, no, we're taking privacy pretty seriously. So, one of the aspects of cash that people value is the privacy dimension. You hand $20 over to someone for whatever, and that's full and final settlement, and it's just between the two of you. I mean, one of the things, and we got a lot of feedback through our consultation on how important privacy was. Now, there are people that say, I don't want the government knowing anything, and fine, that's their position, and concerns that transactions will be monitored. We are increasingly talking about sort of privacy by design when we think about a CBDC, and what we mean by that is we'll need obviously to balance at certain levels anti-money laundering requirements, but at smaller transaction levels yet to be calibrated. We are starting to think about these things. What we really want is to replicate those benefits of cash in a central bank digital currency, and that can be done through technological solutions, governance solutions, what have you. So we see privacy as actually, from a central bank money point of view, quite important. Now, there are varying views on this. I think if you talk to the police, they will be very concerned about privacy and see cash as central to illicit transactions, etc. So yes, that obviously does happen, but there are legitimate reasons why people should value privacy, and that is a feature of the current form of central bank money, and we think it should be a feature of digital forms of central bank money up to certain sort of limits. If you don't mind, I might just completely sidestep the geopolitics of what the People's Bank of China are up to.
How much work have you done thus far on how much it would cost to actually implement a central bank digital currency and how this would be paid for?
Well, we haven't costed that. We haven't costed that out. I mean, obviously, as we work our way through, we will be doing cost-benefit analysis. How you design it and what the use cases are and all these things are going to have a really big impact on the cost of setting it up. Of course, you'd be putting that cost against the benefit of protecting monetary sovereignty as well. So we don't have a dollar amount, and we haven't even begun to think about that. So yeah, I don't know, but of course it will be important as we work our way through and start to refine the concepts and the design to think about the cost. And one of the things that we'll hear a lot about as incumbent banks worry increasingly about a central bank digital currency, they will raise costs And when you do cost-benefit analysis, it's really important not to confuse, different shares of the pie getting shared around differently from actual costs. So we need to work our way through that. And just, if I may, one other point on that. If you do a thought experiment about the RB not acting and not starting to think about central bank digital currency and not doing anything about crypto currencies or stable coins, banks are facing an even greater risk from other forms of private money that are currently, by and large, unregulated. People in industry have said, oh, they're regulated. There's, FMA and Act and other bits of legislation. But I guess our perspective is that, yes, there is some regulation. It's not sufficient, and those other forms of private money are not on a level playing field with the banks. And so I think that is something for the banking sector to think about, and hopefully support a level playing field and proper regulation and a properly functioning role for central bank money.
Now, I'm sure as you develop the concept further, you'll be looking at cybersecurity issues. That's a huge thing these days. But also in terms of how central bank digital currency would be distributed and used and what infrastructure would be needed. I mean, any firm thoughts on that yet?
We are talking to various firms out there about how it's accessed and used. And one of the things that we're cognizant of and we'll be thinking quite a bit about is the interoperability of a CBDC with existing systems and with new ways of doing things. One of the things, if you do a CBDC, is you want people to value it and use it. And so we would need to think about, the impact on businesses, for example. So it's pretty clear to, if you've got a more efficient payment system that benefits consumers, it also indirectly benefits businesses as consumers are better off. But there are costs to a proliferation of payment mechanisms and approaches. So we need to think about the interoperability. You don't want to see a proliferation of point of sale terminals. There are obviously changing technological ways of transacting. So these are all things that we will need to think about. But I'd say they're more like second order or down the track considerations at the moment. We're more focused at the big design questions. But yeah, we will definitely have to come and think about that.
And if you ultimately do push ahead and decide you're going to launch a central bank digital currency, will you need government sign-off?
Yes, I would say we would. There's an interesting. I'm a simple economist, not a lawyer. There's we're talking about central bank money. We currently have physical forms of money. Now, I wouldn't say for a second that you would not want a really robust legal framework around the issuing of a CBDC. There's a bit of a philosophical question in there about, well, what's different? As cash declines and we currently have digital forms of money. Now, I know the lawyers will say, well, there's nuanced issues around what does it mean to be legal tender and all of those sorts of things. They will all need to be sorted out. So I think it's pretty unambiguous that you will need government support and you would need an updated legal framework. I'm not sure it's particularly fundamental myself, but I think you would want to be fairly legally robust, of course.
Well, look, thanks a lot for that, Ian. It's a fascinating area, and we'll watch closely as we hear more from the Reserve Bank about a potential New Zealand central bank digital currency in coming months. That's Ian Woolford, who's the Reserve Bank of New Zealand's Director of Money and Cash. And this is the Of Interest podcast from interest.co.nz, and I'm Gareth Vaughan.